I know you're reticent to say that whatever happens in the Senate, it's a game changer for good or ill as far as the market's concerned.
Well, so I think what's been lost in the obvious analysis around the Georgia runoff elections, and we don't know the results, and Aben talked about it a lot in terms of how things get done, the need for 60-vote majority, the fact that budget reconciliation is only once a year. Will that be the first priority on the tax side, which is the policy that would be most relevant to markets? But pre the Georgia runoff elections and coming through the presidential elections and the House elections, we didn't really have a blue wave. Even now, we had more of a centrist wave, and we've got the narrowest margin in decades in the House as well, with about a couple dozen House members on the Democrat side that are in GOP-leaning districts. So I think the centrists, I agree with what was said before, that the centrists really have a lot of power right now. And I think once we know the results of the Georgia runoff elections, especially if we end up 50-50 in the Senate, it is a function of what we're hearing from the centrists. So I think commentary from those centrists, both in the Senate and the House, might give a little color on what the priorities are. But it does seem, and our guy in Washington, Mike Townsend, does believe that anything major from a tax perspective is less likely than I think what the narrative is on a day like today.
All right. So that's the tax picture. But with the 10-year now 104, markets at the high of the day, is this about reacting to rates? Is that what the banks are telling us? Is this about near-term stimulus or vaccine hopes? What do you think? Why the leg higher today? We've already made up for Monday's losses.
Well, clearly, I think the move above 1% and the steepening of the yield curve has been a story behind the outperformance of banks and financials more broadly, although that's not just a one-day phenomenon. That was a kind of a trade that kicked in the early part of November when we got the vaccine news. So I think this move, not just to more definitive cyclical areas, but really the areas that had been the most dominant underperformers during the worst phase of the pandemic. So financials in particular, energy to some degree, that really developed the leadership characteristics. It was sort of defined as the value trade, but it's simply because value is so much more dominated by financials, and you saw that trade. But in financials, which is one of our only outperform rated sectors, by the way, we also have to remember that the financials and the banks went through Fed administered stress tests last year, and they came through quite well. So we're not just talking about the yield curve impact on banks and financials more broadly, but a healthier underpinning in terms of the fundamentals of many of the companies as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.